The market recovers from opening lows to trade with gains led by the auto sector. The Nifty climbs above 24,900, just below that now as we speak. Broader market in line with benchmark indices, with more stocks advancing than the number of stocks declining.
Shares of Hindustan Zinc, they're down 5% in early trade after 7.2 crore shares worth around 3,300 crore rupees change hands in a block trade. Sources tell CNBC-TV18 that the promoter entity, Vedanta, is likely to be the seller. They have sold a partial stake in the company.
IndusInd is up 5% in today's trading session. The top Nifty gainer, Nomura, has upgraded the stock to buy rating from neutral, raised the target price from 700 to 1,050. The brokerage believes legacy issues have been addressed and expects an improvement in their return on assets to about 1% by FY27.
Shares of DMart, they trade with gains as it forays into Uttar Pradesh with a store in Agra, marking its first foray into a new state since 2017. Hello and welcome to Chartbusters. We are coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel, with me is Mangalam. And the markets are trading mildly in the green. The Nifty is up 25 points. We've come off a little bit from the top, though the midcap index doing a relative underperformance with a mild cut in trade, though you have more number of stocks advancing than declining. Hey, Mangalam.
Hi, Nigel. And look at the stocks that are buzzing around. Yeah, you have Zydus Wellness. We had pointed out that TPG Capital is a clean out trade out there. Stock up 10%. We had the management here on CNBC-TV18 on Chartbusters itself post their fourth quarter earnings, spoke about increasing their general trade presence and also improving their margins. So Zydus Wellness is a stock which is up around 10%, should come up for you on the screen. Alongside that, we have some traction on Electronics Mart as well. And TVS Supply Chain, there was an interesting large trade that took place out there where Autumn Investments sold stake, but the buyer was TVS Motor Company, which is the promoter of TVS Supply Chain. So both those stocks up for you. Zydus Wellness up nearly double digit in today's trading session. TVS Supply Chain is the other one, which is up 3.5%. But we're putting focus on Endurance Tech. That is the company that reported their steady set of numbers in the fourth quarter. More importantly, what the outlook is beyond that is something that we'd like Rajagopal Shastri, who's the group CFO's view on. He joins us now. Thanks a lot, Mr. Shastri, for joining in. You know, nearly a quarter of your revenue comes in from the European markets. There is a fair amount of geopolitical uncertainty that we're seeing. In light of all of this, what's the kind of very near-term outlook that you have? The next couple of quarters, are they likely to face some sort of demand challenges? And in light of that, what's your entire year's outlook on the revenues?
So the challenges, as you mentioned, posed by the macro environment are true. Yes, that we are seeing volumes are dropping. And we closed last year with close to 305 million of revenue for our European operations. But as we see the evolution now, our order books are very healthy. We have strong orders, from a micro perspective of the company. And this has come because of, as we have been mentioning this quite often in the past also, we have done some very careful order acquisitions in the past, and we have invested in capacities for those orders and without increasing the fixed cost element. So those are giving us the flexibility to cater to any kind of demand which comes from the market, whether it is for their electric vehicles, for the plug-in hybrids, or even the normal ICEs, which is what the demand keeps oscillating from to. But agnostic to the powertrain, we have demand, we have capacities, and because of which we do see that we will not be facing too much of a problem because of the demand drop compared to the markets.
Hi, Mr. Sastry. Thanks a lot for joining in, sir. What are you doing so right, though, in Europe? Because you're definitely outgrowing the industry out there. The industry is seeing quite a lot of turmoil, but you managed to grow quite well. Do you expect that trend to continue?
So there is one important aspect which will give us a significant growth in FY26 because that's coming from our acquisition of a company called Steferle, which is an 80 million euro company with a very healthy EBITDA margin. And we have done a 60% acquisition of that with a definitive agreement to acquire the balance over the next 5 years based on the EBITDA multiple. So this is going to give us a significant addition to our revenue, which is coming from the inorganic side. Organically also, we are seeing that we have acquired some interesting orders in the past few quarters, which are also coming into their job run and start of production now. We should see that Europe operations will not suffer unduly from the effect of the market, and we will be growing on the near term and also the medium term.
In terms of new business, you did speak about the acquisition in which you made 60% investment. Now you're looking to increase it to 30%, increase it by another 38% as well, take it to 100%. What have been the synergies in terms of, revenue addition when it comes to new clients for the other parts of the business? That's point number one. And secondly, you had spoken about some new ABS contracts domestically for Bajaj Auto and Royal Enfield as well. What's the update on that?
So I'll answer the first question first. From the European, the acquisition is giving us a significant presence with a OEM with whom we were not present earlier. So that is giving us a good advantage, especially in the geography of Germany. Two, it also gives us the synergy because this acquisition is not only machined castings, but they also have the capability of building their own machines. So this, together with our existing German operations, is giving us a strong presence. Now, this is in the backdrop of a significant number of vendors in the supply chain of the market in which we are present in. They are all growing weaker because of various aspects pertaining to their burgeoning fixed cost and the heavy investments which are made in the past. So this is giving us a unique opportunity because we are still cash positive in Europe. We are having good margins in the businesses which we are doing, and we also have a very low burden of the fixed cost. With all this, we stand in a good position to make the best use of the market there. So that's one aspect. That's the first question which you asked. The second was on the braking. Now, yes, we have been investing on the braking side, not just the foundation brakes. We have been growing significantly on the overall, right from the brake lever all the way to the brake in terms of the controls, that is the anti-lock braking system. So we have been in the market with our single channel braking, anti-lock braking system already. Now we have started supplies of the dual channel braking, dual channel anti-lock braking system to Royal Enfield and also Bajaj. So as we had projected, now we are very big already in the disc brake segment. We are almost fully utilizing the capacities which we have put. And all the backward integration we have planned in the anti-lock braking system, like making our own braided hoses, making our own electronic control unit, and also we in the future will be using our SMT line in the EMS we have put as an integration, backward integration of the battery management system. All this is going to give us good cost advantages and also the ability to capture the market quickly and grow in those lines.
All right, sir, give and take everything. You mentioned your order book is quite healthy. Could you quantify it for us? Point number one. Point number two, for the year. Yeah. For the year, with your inorganic growth, with the kind of traction you've seen on business, what is the revenue growth you'll be looking at, and what kind of a margin band should we work with?
I will show you the rearview mirror. You can look at the road in front because we don't give forward-looking guidance. But if you look at the last 5 years, our order book was close to 4,500 crores of orders we had acquired. Now, I'm talking about standalone India. I'm not including Europe. And within this 4,500 crores, we do not include the orders which we get from Bajaj because they being our largest customers, we more or less get a significant market share of what they do. Out of this 4,500 crores, close to 1,800 crores has gone into their job one in the last financial year, which means the full volumes of those will come this year. Now, another 1,100 crores is expected to have their job one or startup production in this financial year, which also augurs well. Plus, our new investments, that is, we had 3 new investments in the last year. One was we are setting up a new alloy wheel plant in the Bitkin area of Aurangabad. We are setting up a 4-wheeler casting plant which caters to a lot of international customers. We already have received close to 280 crores of orders from large marquee international customers for specialty electric vehicle related castings with some specialty coatings and surface treatment. And we also have announced that we are getting into battery pack assembly, where we have recognized some white spaces where we can use our application engineering and also our battery management system capabilities to naturally progress into. All this also will see some revenues in the upcoming quarter. So with all this, we are very positive that the year, as you see, is opening up nicely and interestingly. And added to that, we are also looking at some amount of volume increase from our customers also. If not the big double digits, at least it will be in the higher single-digit growth also because the monsoon is good. The government has been announcing certain very strong initiatives like the tax cuts, the overall increasing the liquidity market, making it cheaper. So we are seeing that augurs well for us.
So, I understand you won't be able to give us forward-looking guidance, but just qualitatively speaking, last year you grew in low teens, about 13% in terms of revenue. Your margins improved by about 50 basis points. All things considered and all the triggers, do you think FY26 will be better than FY25?
That's our endeavor.
Okay. All right. And what about your revenue mix X of two-wheelers? Bajaj is a big client for you, accounts for nearly 40% of your India business itself. But you have been looking to increase your share coming in from four-wheelers, which is a higher value product, right? What's your aspiration here?
See, our aspiration, if you look at that from a strategic perspective, as we look at year 2030, Europe business is predominantly four-wheeler, and that's about 25% of our business. Close to 5 to 6% of our India business is from four-wheelers. So we would like this but the two-wheeler business also we have significant headrooms because while we have good market share with our main customer Bajaj, for all the other products with all the other customers, while we are receiving a lot of RFQs, like we have got about 3,400 crores of requests for quotes, which we are actively pursuing. So we see a significant headroom in our two-wheeler business also. Given that two-wheeler business would grow, and we are looking at organic and inorganic opportunities in the four-wheeler business, and European business, as we just saw, will grow significantly because of the acquisitions. We would be happy if we reach about 35% of our total business coming from four-wheelers. It will be something which we are aspiring to, and that's our strategic plan.
All right, Mr. Sastry. Got it, sir. Appreciate you joining in. Wishing you all the best for the remainder of this fiscal. You're sounding quite optimistic about the prospects. We'll try to squeeze you on some numbers post your quarter one results as well. Thanks a lot.
We believe in our team here. Thank you.
All right. Appreciate that. Thanks a lot for joining in. Well, time to slip into a short break. But on the other side, we'll continue our focus on markets as well as on stock-specific action. Welcome back. You're tuned in to Chartbusters here on CNBC-TV18. Well, the markets have been wibbly-wobbly, currently holding with some gains. Chandan Taparia, Motilal Oswal Financial Services joins us to help us out how he's treating the situation. Hi, Chandan. Good morning. We appear to be in a bit of a band. What's your take? Which way are we likely to drift from here on, and what's the fresh call at this hour?
Good morning. Thanks, Nigel, for having me. So Nifty got stuck in a range from last 28 trading session. We have seen sustained buying interest near 24,442 marks, but at the same time, upside is being kept with resistance at 25,050 to 25,200 levels. We have noticed that every time whenever the market comes near to the lower band, it witnesses buying interest, but absence of buying is clearly visible. We have seen a decline in India VIX that is hovering near 16.5 marks. That is positive for the market to get the buy on decline stance, but at the same time, sustained call writing at 25,000 strike is not allowing market to move beyond that crucial zone as of now. So I believe market might see some more consolidation for next couple of days to commence the next leg of rally. So as of now, the view is intent to buy on decline with major support at 24,442 for positional target of 25,500 towards the end of June or at the beginning of July. But for immediate point of view, we will use the support near 24,700 to play a small bounce towards 25,000, 25,050 marks in Nifty index. Now talking about Bank Nifty index, here also this index got stuck in a range, but the good part is that supports are intact. We have seen a momentum towards 57,000 in the last week, but now it got stuck in a range. But on immediate point of view, 55,555 is major support to witness a bounce towards 56,250 to 56,500 marks in Bank Nifty index. So in both the indices, we will continue to be with buy on decline, but still we are in consolidative phase and we require some more time correction to commence the next leg of rally towards the end of June or at the beginning of July series.
All right. What about individual stocks? What do you have on your list this morning, Chandan? A lot of them are buzzing around.
Yeah, Mangalam. So first it is buy on Maruti. we have seen buying interest in selective auto pick, whether we talk about Maruti, Hero Moto, or counter like Mahindra and Mahindra. So here we are recommending to buy on Maruti. The stock has given a consolidation breakout of last 20 trading session. Supports are intact. We have seen some built up of long position, expecting some long rollover to happen in the next week as well. Data setup are indicating fresh leg of rally in the counter. So with support of 12,450, we are expecting Maruti to rally towards 13,300 level. Second trading idea, that is buy on Davis Lab. However, Nifty Pharma has got stuck in a range, but Davis Lab has seen some positive bias. Recently, it has taken support near 6450, 6500 levels, and I believe the lower band of the support could provide the buying interest to the counter. So supporting to buy with support of 6480 for an upside target towards 6900 marks. Last trading idea, that is on the momentum play, that is buy on Astral. The stock has been making higher top, higher bottom from last 6 weeks. It has given a decisive hold above 1550 marks. We are expecting fresh leg of rally led by short covering trigger. So recommending to buy with support of 1555, and Astral has potential to rally towards 1640, 1650 levels.
Got it. Okay. All right. Thanks a lot for that, Chandan. Well, we'll take in another snappy break, come back, continue to focus on markets and stocks that are moving around.
Welcome back. The market's now moved into the red. It's a wibbly wobbly screen, and what's doing not so good for the market right now is the IT index. So yesterday it was the IT index that outperformed, supported the cause of the frontline index even when we had the Nifty bank underperforming. And now we have the IT index giving back all of those gains. Overnight we saw some weakness in NASDAQ as well, down about 0.2% for the IT index, whereas the Nifty bank still in the green, though off highs as well. We're also seeing some sell-off in a couple of these auto names. So from highs, we've seen, Maruti Suzuki sell off about 1%. Eicher Motors down about 1.5% from the highs. Hero Motocorp as well is lower. This morning, we had all the financials do well, and now they're selling off as well. So Shriram Finance, for instance, moved into the red after staying into the green for most part of today's trading session so far. Bajaj Finserv is the other one, which too has moved marginally into the green. But no problems for a lot of individual stocks which are picking pace right now. GMM Pfaudler is one of them, up around 5%. Volumes picking up on that one. And Electronics Mart is the other one, which is up around 8% as well. It's an electronic retailer, so that stock is in focus too. But now we understand from our sources that Australia is being considered as a possible alternative source for rare earth magnets as against China. Abhimanyu joins in with some details on what he's picking up. Abhimanyu.
The Indian government is exploring several ways and means to ensure no shortage of rare earth magnets which are used across industries and are currently facing supply chain concerns. Government sources have indicated that Australia is being considered as a possible alternative to source rare earth magnets. Additionally, the government is prioritizing speedier output from the National Critical Minerals Mission and for recycling via a circular economy. Apart from that, non-PLI measures to support the industry may also be considered, and tailings may be used to boost sourcing. The government for now is focusing on raising cooperation in the mining sector with several countries in South America, which include Argentina, Brazil and Chile, and the steps are going to possibly help the overall sourcing of rare earth magnets. Now all Indian mines have to mandatorily conduct testing for critical minerals from their dumps from June 2025, that is from this month itself, and this government order which is going to come into effect was passed way back in February. So of course, that is also possibly going to help the overall sourcing of rare earth magnets. Also, increased sourcing of lithium from Chile is vital for the government's plans to convert 50% of vehicles into electric vehicles by 2030. So a clear-cut plan has already been laid out, but it remains to be seen how early it is going to come into effect, and more importantly, how quickly the government is going to move as far as hedging India's risks is concerned.
Well, Abhimanyu, interesting one. We'll have to see how that pans out as well. For the time being, though, we'll wrap up on this edition of Chartbusters. You stay with us. Trading Hour comes up next.